Good afternoon guys, my name is Roche and Carl and I will be explaining both the periodic and perpetual inventory systems. First of all, I'm going to touch on a few differences and similarities of the two systems. So, one of the similarities for the systems are that both of them require either FIFO or weighted average methods. For the FIFO method, the company basically uses the first in, first out system, where the first batch of goods purchased will be the first batch of goods sold. So this way it helps them to keep track of what was bought first and what was sold first. For the weighted average, they basically take the average of the purchases and they calculate the price using that. One of the differences is that for the periodic system, they use individual accounts in terms of inventory. So let's say, for example, the company purchases some inventory. It won't go under inventory because in the periodic system they have individual accounts. So they post the transaction under purchases, which is why they have individual accounts. And for the perpetual system, all the purchases and carriage on purchases and additional charges will go into inventory. So that's basically the difference. So this system will use mainly inventory for purchases, carriage on purchases, and any other additional charges, and this system will use the individual account. So let's make a small example. In the case of the periodic inventory system, if a company purchases 10 cars and a car dealership, and these 10 cars needed to be delivered to the company's location. First of all, the first transaction would be purchases, which is the cost of the actual vehicles. This will go under purchase account because, as stated here, its individual accounts are open. So in the periodic system, for each different category, so for example purchases, carriage on purchases, and any other cost involved with the purchase, is separated from inventory. So purchases would be opened, the amount would be debited to purchases because it's an expense, and then carriage on purchases would also be opened, and it will also be debited because it needs to be a separate account. And in the case of perpetual inventory system, if a company were to purchase 10 cars, again, the same example, regardless of the carriage on purchases, everything would fall under inventory. So if the cars needed to be delivered, it doesn't really matter. All the costs would be debited to inventory because it adds on to the cost. So the next difference is that in a periodic system, the inventory account is only adjusted at the end of the year. This is because of all the individual accounts which we explained in the previous example. So for example, if purchases happen during the month or during the year, if carriage and purchases happen during the year, this is only balanced in inventory at the end of the year. That's the rule for the periodic system. In the perpetual system, however, if you make a purchase and carriage on purchase, like I said in the previous example, if a company purchases 10 cars, those costs go straight to inventory, which means that inventory is continuously adjusted. So if the company buys 10 cars, inventory will immediately be affected. And those are the differences. Carl will discuss the rest of the example.
Good afternoon. My name is Carl Ali, and I'm going to be explaining or giving you examples of the perpetual method and the periodic method. So, for company A, buys 1,000 units at 30 Rand per unit. So, in the perpetual method, you would say on the 1st of May, inventory purchased, of course, on the debit side 30,000, because 1,000 times 30 is 30,000, and under that will be accounts payable, and that will be on the credit side. For the periodic, it will be the exact same thing, except for purchases here, and on the debit side 30,000. Under that, accounts payable will be credit side 30,000. Company A sold 200 units of merchandise at a selling price of 50 Rand. It doesn't state whether it was credited or paid by cash, so we're going to use credit in this case. So for the general journal entries, for the first entry we use accounts receivable and we debit it by 10,000 Rand because 200 times 50 Rand is 10,000. And you credit sales because it's an income. And for the next entry we will debit cost of sales because for each unit it's 30 Rand and they sold 200 units. So you will debit cost of sales and you will credit inventory. In the periodic inventory system, everything is the same except for the last two entries. So you wouldn't have cost of sales and inventory. So you would debit accounts receivable because it's an asset, and you would credit sales by 10,000 because that's your income.